in the face of today's volatile and often unpredictable market environment, Palantir has managed to shine. Although the stock did experience a temporary decline alongside major market indexes during recent weeks, it quickly staged an impressive comeback and is now up by an outstanding 33% so far this year. This remarkable performance has drawn the attention of both retail and institutional investors alike. The driving forces behind Palantir's popularity are its relentless revenue growth and the widespread adoption of its software solutions among both government agencies and commercial enterprises. Demand for Palantir's cutting-edge artificial intelligence-driven technology remains incredibly strong, and it seems that Palantir is only in the early innings of its overall growth narrative. What makes the current situation even more exciting is that Palantir is preparing for a significant milestone that could serve as a major catalyst for its stock performance, the release of its next quarterly earnings report on May 5th. Historically, Palantir has not only met, but often exceeded analysts' expectations when reporting financial results. Furthermore, forward-looking projections have remained optimistic, indicating confidence in the company's continued momentum. However, it is crucial to stay grounded in the broader macroeconomic context. Over the past several weeks, general forecasts for economic growth have started to weaken. This trend has been fueled largely by growing concerns surrounding President Donald Trump's proposed tariffs on imported goods. Such uncertainty has the potential to slow economic expansion, which in turn could impact the willingness of companies and government agencies to spend on new technologies. If Palantir signals any hesitation about future demand during its earnings call, it could cause unease among investors and trigger heightened volatility in the stock. Even against this backdrop of broader market challenges, there are still several compelling reasons to maintain an optimistic outlook on Palantir's future prospects. While Palantir only recently captured the broader market's attention with its explosive growth, the company's roots trace back over 2 decades. During its formative years, Palantir was primarily associated with government work, providing critical software solutions for defense, intelligence, and national security agencies. These government contracts have remained an essential pillar of Palantir's business strategy and financial success even to this day. To illustrate this, consider the company's most recent quarterly performance. Revenue from United States government contracts accounted for a substantial 60% of Palantir's total United States revenue. Not only that, but this government segment also experienced double-digit percentage growth, reinforcing its role as a cornerstone of Palantir's expansion story. However, what truly sets Palantir apart in recent times is the remarkable growth witnessed within its commercial operations. Over the past few quarters, Palantir has significantly expanded its reach into the commercial sector, demonstrating its ability to diversify its revenue streams beyond government clients. Currently, Palantir boasts a roster of 382 United States commercial customers, a figure that represents an almost 5-fold increase compared to just 3 years ago. Revenue generated from these commercial customers surged by 64% in the latest quarter, continuing a trend of strong double-digit gains seen across multiple previous periods. Additionally, Palantir achieved a record-breaking total commercial contract value in the United States market, securing commitments worth more than $800 million. This achievement underscores the company's growing appeal and competitive edge within the broader private sector. Naturally, this prompts the question, what exactly is fueling the strong demand from both governmental agencies and private corporations? The answer lies in the sophistication and versatility of Palantir's software offerings. For many years, Palantir has been revered for its data integration platforms, which enable clients to aggregate vast amounts of information, analyze it intelligently, and derive actionable insights to improve operations and decision-making. Approximately 2 years ago, Palantir introduced its artificial intelligence platform known as AIP. This groundbreaking platform combines the power of artificial intelligence with Palantir's expertise in data analytics, allowing customers to unlock even greater value from their information assets. For example, within a military context, AIP could be deployed to rapidly survey a high-risk zone, forecast potential threats, and devise optimal tactical responses. Meanwhile, in the commercial sector, a company could utilize AIP to enhance supply chain management, optimize product distribution, or minimize operational inefficiencies, thereby reducing costs and improving profitability. These examples merely scratch the surface of AIP's transformative potential, which extends across industries ranging from healthcare to manufacturing to logistics. Given these capabilities, it comes as no surprise that Palantir's business has been expanding at such an impressive rate. The company's management team remains highly optimistic about the future. Most recently, Palantir forecasted Q1 revenue to potentially reach up to $862 million, which would represent an approximate 35% increase on a year-over-year basis. Moreover, the company expects its adjusted income from operations to climb by as much as 58%. If Palantir succeeds in delivering or even surpassing these financial targets when it reports on May 5th, it could trigger a meaningful rally in the stock price. Additionally, if Palantir's leadership offers reassuring guidance about sustained growth amid current economic uncertainties, investor confidence could be further bolstered. Nonetheless, it is important to temper expectations. The market environment remains highly sensitive, and even minor disappointments could lead to sharp downside moves. If Palantir's earnings report or future projections fall short of the high expectations currently baked into its share price, investors could see notable short-term declines. Therefore, choosing to buy Palantir stock before May 5th represents a calculated gamble on short-term outcomes, and such a strategy carries inherent risk. However, investors who adopt a long-term mindset can mitigate much of this risk. When considering a time horizon of 5 or 10 years, short-term fluctuations typically have minimal impact on overall investment returns. Consequently, whether you choose to buy shares today, next week, or even a month from now, your results are unlikely to differ significantly over the long haul. The key lies in maintaining a patient and disciplined approach, allowing Palantir's business fundamentals to play out over time. Now, returning to the key question, should you buy Palantir Technologies stock right now? The answer largely depends on your individual investment philosophy. When evaluated through traditional valuation lenses, Palantir does appear to be richly priced. However, when factoring in growth through the forward price to earnings to growth ratio, or PEG ratio, the stock seems more reasonably valued. Palantir's current ratio stands at 0.9, which is below the typical threshold of 1 that often signals overvaluation. Ultimately, conservative, value-focused investors might prefer to look elsewhere given Palantir's premium valuation metrics. On the other hand, investors who favor aggressive growth strategies and are comfortable paying up for market-leading technology companies may find Palantir to be an attractive addition to their portfolios. With its strong positioning in the artificial intelligence space, expanding commercial footprint, and deep-rooted government partnerships, Palantir is poised to remain a powerful force for years to come. In the end, Palantir Technologies remains a high-potential growth stock fueled by strong government ties, explosive commercial expansion, and pioneering work in artificial intelligence technologies. However, the stock is not without risk, especially considering the sensitive macroeconomic environment and already high market expectations. If you are an aggressive investor with a long-term focus, Palantir could be a smart addition to your portfolio, but if you lean toward value investing or have a low tolerance for volatility, it might be best to stay on the sidelines for now. As always, it is important to conduct your own research and consider your own financial goals and risk tolerance before making any investment decisions. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.